Hey guys, welcome back. You're still tuned into Trading Hour here on CNBC-TV18, and let's get a corporate conversation going. We're going to speak with the management of DreamFolks now. The company posted a good set of Q4 numbers, so their revenue has jumped a lot. But remember, of course, this is off a low base. Margin has also expanded well, so it's coming at over 14% for Q4. To get a sense of, where things are really, how travel demand is looking, we are now joined by Chairperson and MD Liberatha Peter joins us on the show now. Liberatha, thanks a lot for joining us as always. This is Pavitra. To begin with, if I can just get a sense of what demand is looking like, what are the kind of, revenues that the kind of move that you're seeing in terms of occupancies coming in. Are we back to pre-COVID levels at these airport lounges?
So Pavitra, yes, in terms of the numbers, yes, we have, crossed the pre-COVID numbers. This was in December 2022 itself. And in terms of the trend, I would say that, yes, the lounge as such has actually, the demand has increased because the awareness of having a lounge benefit on the credit card is growing. And in terms of the airport traffic also, if we see, the airport traffic has grown by 60%. So yeah, I would say that, these are the factors which we would say that, which is helping the business to grow.
Okay. So can you give us, some more sense on what this year is going to look like? Because going by the way we are seeing the numbers, air travel is only increasing. And it's not just air travel. The other question is, Liberatha, that you're looking to add more services. For instance, I believe you're looking to go big on golfing, on duty-free, and some of these other premium services as well. How much contribution do you see from these newer services to your top line, say, by the end of this year?
So you're right. As a company, it is just not the lounges, but we have also got into the other services like the meet and assist, airport transfer, the spas, F&B, duty free, and also now golf, which is added. So we understand that as a benefit which has been given to the card holders are also increasing. So we also have added not just in terms of the services, but in terms of the solution as well, trying to add on different set of solutions to the program. So I would say that, it's not just going to be the lounges. Presently, if you look at the complete wholesome business, yes, the contribution of the numbers are through the lounge business. But over the period, we would say that, the other services are also going to contribute. And it would take a couple of years where we would see around 20 to 25% contribution from the other services as well.
Okay, so when you say a couple of years, does that mean FY25, 26? And also, how will that impact the blended margin profile? Because I think you've been at 12%, 13% margin, a blended company level EBITDA margin. So let's say golfing or spa or some of these other newer areas, are they better margin businesses? And by when do you get there? And then what does that do to your margin profile?
So I would say that the contribution would be in another 2 years' time, and in terms of the margins, I would say that as a company we would try and maintain the similar margins the way we have been maintaining for the lounge business.
Okay, got that. Just getting back to the main business now, we were looking at the gross profit per passenger, and it seems to have seen quite a big rise for all of FY23. It's come in at around 156. So that's a 20% jump year over year. Do you think this kind of, growth that we're seeing in this is sustainable, and you expect that same thing going forward?
As I told you, Pavitra, that, the awareness of lounges is growing and the awareness of the other services are also growing. So we would say that, yes, it's going to be a sustainable thing, and we'll try and maintain the same margins going forward as well.
Just to get more color on that, a little more color, Liberatha, on this, because a couple of things are happening, right? On one hand, we understand that overall MDR, merchant discount rates, they have been going down. So could that impact you a little negatively? And also, we've seen a bit of a pushback from banks because of overuse of cards, especially at airport lounges. We heard that for instance, from HDFC Bank. How does that impact your business?
So I would say that, it is not just the MDR charges, but this is basically the customer acquisition cost, right? So if you have actually observed in most of the airports as well, where you have the credit card kiosks where they try and sell their credit cards. The first thing they announce is about having a lounge benefit, and that is the selling point for the credit cards as well. In terms of, that's what I said, that the customer acquisition cost is there for the banks and the network providers. However, yes, there are few changes what we are also doing, because we also understand that most of the customers or the card holders are actually using the lounges or carrying the cards in their pockets only to use the lounges. So the models are being changing, and we are also trying and doing different solutions, which would also be a spend base or a tiering which has been done. So those are the changes what we have done as a company, and that is there, which has been more attractive even for the banks and the different sets of clients as well.
Okay, just one final question, since we are talking about the lounges. I think last time we spoke, you were sounding very optimistic on the railway opportunity as well. Can you tell us how that's looking? Because, we're seeing demand pick up across the board. These areas have been doing very well as well. So are you seeing those kinds of rates in the railway lounges as well?
So Pavitra, if you see the number of lounges right now have grown from 9 to 12 lounges, and the government is initiating to increase more lounges in railways as well. So in terms of, the growth factor, I would say, yes, there is a huge potential there. And we ourselves are seeing, month on month, a 20% growth right now in railway lounges as well. In terms of the, overall, if I have to look at the numbers right now, it is very minuscule in terms of the airport lounges. But I see going forward, a huge potential in railway lounges as well. In terms of the margins, we try and maintain a similar margins even for the railways as well.
Okay, so you've spoken about margins quite a bit. Just leave us with the guidance, perhaps, if possible. Top line growth this year, 20%, more, less?
If you look at the industry trend, the way it is growing, right, and we are going as per the industry. So I would not be able to comment anything on what exactly the growth would be. But yes, the way the industry is growing in terms of the airport traffic growth, and secondly, the credit card penetration. So I think these are the factors which are leading for the growth of the company. So yes, it would accordingly, we would see the numbers growing for DreamFolks as well.
Okay, all right. Thanks very much, Liberatha, for being with us. Good chatting with you today. That's DreamFolks, a company that directly stands to benefit with more and more air travel picking up. Of course, they're also in railways now. So
stock has also done well. It's up 60% this year.
Given the way people are traveling everywhere and taking vacations, I guess we can understand why. That's DreamFolks for you.